The World Bank has trimmed its Malaysia GDP growth forecast for this year to 5.5% from 5.8% previously, due largely to the unfolding developments surrounding the Ukraine crisis. World Bank senior country economist Shakirate Sharifuddin told a media briefing that while recovery is expected to take place this year, the balance of risk remains tilted to the downside. She said the situation in Ukraine will dampen global economic prospects, and this will weigh most on export-oriented economies, including Malaysia. Shakira also warned that food and fuel price hikes arising from a prolonged conflict in Ukraine will also weigh on growth prospects. Nonetheless, the World Bank projected Malaysia's inflation to remain modest at around 2% to 3% this year. Other major downside risks to watch out for are the worsening of supply chain disruptions arising from the Russia-Ukraine conflict, as well as emergence of more severe COVID-19 variants. On a positive note, she expects the resumption of activities in more economic sectors, including the reopening of borders, to boost the local economy's prospects, while measures such as the EPF's withdrawal facility and minimum wage hike will bring some positive spillovers on private consumption. Investments should also improve, given there is a little bit of clarity, at least domestically, of where things are going to be. Investment analysts say the bid by Amanat Lebuh Raya Rakyat or ALR to take over 4 highway toll concessionaires in the Klang Valley is timely, given that infrastructure giant Gamuda likely needs funds to bid for some mega infrastructure projects. They believe that Gamuda can unlock the value of its highway concessions through the deal, and that this will strengthen the group's balance sheet, lower leverage, reward shareholders with special dividends, and reduce borrowings. If Gamuda's divestment is successful, it will help the group to repay its existing net debt of 1.7 billion ringgit and achieve a net cash position of 600 million ringgit. It may also work on financing future projects such as Smart 2, the Penang South Island, Australian projects and MRT3 Circle Line. According to Public Investor Research, Gamuda's equity value of 2.33 billion ringgit is considered fair and in line with the research house's valuation of 2.28 billion ringgit for the 4 highways, although slightly lower than PH's 2.36 billion ringgit offer in 2019. Overall, it is positive on this development, despite the fact that Gamuda will have a loss of recurring earnings of circa 170 million ringgit yearly. Meanwhile, CGS CIMB research said the equity value of 2.3 billion ringgit for Gamuda is 1% lower than its own valuation of 2.35 billion ringgit. It said the equity value will increase the group's cash by 63% to 6 billion ringgit and significantly improve its net gearing ratio from 18% to an estimated net cash position of 611 million ringgit. The analysts maintained their earnings estimates for now, pending completion of the deal by the next 3 to 4 months. Genting Malaysia is seeking its shareholders' approval to buy back its own shares in the upcoming Annual General Meeting or AGM. In a bourse filing today, the group said it intends to seek the approval of its shareholders for the proposed renewal of the authority for it to purchase its own shares of an amount which, when aggregated with the treasury shares, does not exceed 10% of its prevailing total number of issued shares at any time. The group said a statement containing the details of the proposed share buyback renewal will be made available via electronic means to its shareholders in due course. At Genting Malaysia's postponed 41st AGM held last September, the group announced that its shareholders had approved the renewal of the authority for a share buyback. This authority will expire at the conclusion of the forthcoming AGM. Genting Malaysia's shares settled at RM2.97 today, valuing the group at about 17.64 billion ringgit. PN17 candy maker Kisan says its subsidiary Kisan Marketing has entered into 2 distribution agreements, which include a deal with pharmaceutical company Jardine Pharma. In a filing with the bourse, Kisan said the agreement with Jardine Pharma will allow Kisan Marketing to be the sole distributor of Jardine Pharma's products for 2 years, from March 15, 2022 until March 14, 2024, in a diversification push which enables Kisan to derive alternative revenue sources and earn the relevant profit margins from such activities. Kisan said Kisan Marketing also entered into a similar agreement with biscuit maker Longshenda Foodstuff. Barring any unforeseen circumstances, it expects the deals to contribute positively to the future earnings of the group. It said the agreements will not have material effect on its earnings per share, net assets per share and gearing for the financial year ending June 30th, 2022. Kisan's share price closed down 4.76% at 10 cents today, giving it a market capitalization of about 13.73 million ringgit. Perodua booked a 6.4% increase year-on-year in first quarter 2022 sales to 61,624 vehicles from the 57,909 units sold in the same period last year. In a statement today, Perodua President and CEO Datuk Zainal Abidin Ahmad said the impact of COVID-19 and component supply issues were still present, but the company was able to work with its suppliers and dealers to reduce the impact. Its focus now is to expedite delivery of the vehicles to its customers before the sales tax exemption deadline ends this coming June 30th. Like the MAA, the automaker is also hoping that Putrajaya will further extend the sales tax exemption to help the industry to sustain growth during this recovery period. Perodua registered 26,759 vehicles in March 2022, a 9.5% increase from 24,433 units sold in March 2021. Sales jumped 53.2% from 17,421 units registered in February 2022. Zainal said Perodua's highest monthly sales achievement was recorded in October 2021 with 27,858 units registered. Moving forward, he said the carmaker expects the second quarter to be the highlight for the automotive industry as brands will deliver as many vehicles as they can within the 3-month period. Perodua maintained its 247,000 sales target for this year.